mga kaibigan, welcome to In My Toolbox, your go-to channel for business, finance, sales, marketing, and everything in between. So whether you're an aspiring entrepreneur, a seasoned professional, or simply someone eager to sharpen your skills, or maybe even you want to be the smartest person in the room, right? So this is where we unpack the tools that you need to succeed. Each episode, mga kaibigan, dives deep into proven strategies, actionable insights, and of course, expert advice to help you navigate the fast-paced world of business, right? From mastering sales technique, decoding marketing trends, to financial literacy, and cultivating a growth mindset. So we cover it all here at In My Toolbox. Plus, we explore valuable insights from the educated world, ensuring that you're always equipped with knowledge that matters. Think of this show as your personal toolbox, stocked with the resources, tips, and inspiration that you need to tackle challenges out there, grow your business, and reach your goals. A quick disclaimer, mga kaibigan, the information that that's being shared here is for general information purposes only. And this should not be considered as a professional advice. Well, I'm not a tax advisor, I'm not a lawyer, or a financial planner. For personal guidance, please consult a qualified professional in your relevant field. So if you're ready to level up, hit that subscribe button, hit that like, and let's build something extraordinary together. My name is Enrico Pobre. I'm an economist, financial professional, business consultant, and your resource. Again, welcome to In My Toolbox. So ladies and gentlemen, I would want to talk about a very timely topic for everybody. So we're going to be talking about, entrepreneurs here in the United States, just to navigate what we call U.S. taxes. Okay, so I don't know if you know that many Filipino entrepreneurs here in the United States are unknowingly overpaying their taxes, or maybe worse, right? So maybe facing penalties due to simple mistakes. Taxes kasi here in the United States may not be the most, well, everywhere naman. It may not be the most exciting topic, but I want to tell you that this can make or break your business, if you know what I mean, right? So if you're running a business like, freelancing or expanding your operations from the Philippines to the United States, right? So understanding the tax obligation is so important. Is as important as growing your business. And guess what, mga kaibigan? The right tax strategies would be able to save you thousands of dollars every year. So, well, here, the U.S. tax system, mga kaibigan, here is actually complex, especially for Filipino entrepreneurs who may be are unfamiliar with the different tax structures, deductions, and compliance requirements. Many business owners end up paying more than they should. We don't like that, right? So simply because maybe we just don't know which deductions apply to whatever, right? So worse, some face actually hefty IRS penalties for missing deadlines, or mixing personal and business expense, or failing to track taxable income properly. So that's exactly the reason why I want to talk to you guys about this one. So the good news is, with the right knowledge and planning, you can stay compliant, minimize your tax burden. And of course, what we want is to maximize your profits. So all of this while avoiding costly mistakes. So whether you're a Filipino small business owner, an independent freelancer, or an entrepreneur expanding into the U.S. market, maybe this will be a good guide that will break down everything that you need to know about. What is the best structure for Filipino entrepreneurs to save money, how to legally reduce your taxable income through what you call deductions. You would want to avoid IRS penalties by, of course, paying your taxes correctly, and most importantly is on time. And then the U.S.-Philippines tax treaty, you will want to understand that and how it can work in your favor. So mga kaibigan, just a tip, think of taxes as a business strategy, not just an obligation. So if you look at it as a strategy, a business strategy, well, you're going to be You're going to be putting this as part of your operations. And the more you understand them, the more money stays in your pocket. And that's money you can reinvest into your business or give to your family, and of course, have a good future. So I want to break down, all of these things with you, and I hope you're ready to take control of your taxes and put more money back into your business. All right. So let's talk about business structures and the tax implication. So choosing the right business structure for tax efficiency. Your business structure affects how much tax you pay, your personal liability, and the paperwork that you need to file. Let's just say that, you have a business structure like a sole proprietorship, right? So this is best for freelancers, consultants, and small sellers. And the tax treatment on this one is income tax on personal returns and self-employment tax that actually applies. Okay, so a good example of this one is a Filipino Uber driver. Maybe you report an income on a Schedule C, and you will need a Form 1040 for this one. How about a limited liability company and an LLC? This is usually for small business owners, online sellers, and the tax implication is the tax flexibility. There's a tax flexibility in an LLC because you can elect as a sole proprietorship, an S corp, or a C corp. A good example maybe is a Filipino virtual assistant agency. That you operate from home. You can use that. Okay, or another business structure could be an S corporation or an S corp. This is for business with profits over $50,000. Okay, so tax implication, of course, lower self-employment tax. The owner takes salary plus dividends. You can do that, right? So a good example of this one is a Filipino-owned, maybe a marketing firm. Electing that S corp status will be able to reduce that self-employment tax. Okay, I know you've heard the C corp already. So this is for growing business or companies seeking investors. You would want to have that C corp, and it actually pays corporate tax of 21%. Dividends tax actually is taxed separately. A good example of this one could be a Filipino-owned e-commerce brand, which actually sells globally. So these are the things that you would want to research on. Just a key takeaways from that one. If you're just starting, sole proprietorship or LLC is actually ideal. If you have profits over $50,000, you would want to consider an S corp for tax saving. But if you're looking for investors to be part of that company, a C corp may be the best choice. I would want you I would advise you to talk to your lawyers on how you would want to position yourself when you put up a company for you. Okay, so so again, guys, let me know. You tell me which structure actually fits your business, and maybe you just put that on the chat. Give insights. You can add on to what I'm saying so others can actually see that too. Okay, so let's talk about paying taxes and avoiding IRS penalties. So understanding estimated quarterly taxes is something that you would want to consider too. Unlike employees, self-employed individuals must pay their own taxes since no employer withholds them. Okay, so maybe you would be asking, who needs to pay quarterly taxes? So any entrepreneur, that expect to owe $1,000 or more in taxes for the year. So you would want to, pay your taxes quarterly. Example, let's just say a Filipino online seller. If that Filipino online seller is making, let's just say, $80,000 a year, you would want to pay an estimated taxes, 4 times a year. So quarterly deadlines is April 15, June 15, September 15, and January 15 the following year. So how would you calculate those quarterly taxes? So estimate your total yearly income, deduct eligible business expenses on that. Now you have to start to calculate 15.3% for self-employment tax, federal or state tax based on the bracket. Now divide by 4 and you pay that quarterly. So I don't know, you guys, if you've been doing that, so I want to ask you this question. Have you ever been surprised by big tax bill, at the end of the year? Of course, if you're not so into those those details of paying taxes, I bet you did have that tax bill, big tax bill at the end of the year. So let me know, guys, if you have that, and maybe you can also tell us how you were able to fix that, or what was your reaction when you had that. Okay, so let's talk about maximizing tax deduction. So what expenses can you actually write off? So Filipino entrepreneurs often miss out on legal deductions that could significantly reduce taxable income. Let's just say home office deduction. Example, a Filipino freelance writer can deduct rent, utilities, and internet costs. That's something that you would want to do. If you're not doing that, ask your tax tax advisors for this one, if this actually makes sense. Vehicle and travel expenses is another one. So for example, if you're a Filipino that has a food truck, you're a food truck owner, you can deduct mileage, gas, and repairs. Okay, so business travel is also something that you can deduct. Because maybe you were sourcing products in the Philippines, in Manila, that can be a deductible too. Don't forget marketing and advertising. If you're a Filipino, if you have a Filipino-owned business, like say a skincare brand, spending on let's just say a Facebook ad, you can actually write off those ad costs. Meals and entertainment. This can be 50% deductible. So a Filipino, I met a lot of Filipino real estate agents here. I hope you guys are doing this one. Taking clients to dinner, you can deduct 50% of meals and the cost of the meal. So if you're that, guys, let me just ask you this question. What's the most surprising tax deduction that you've actually learned about, in your business journey? So you can actually put that on the comment below. If you have one, let us know and how you were able to go about that, right? Let's talk about tax saving strategies for growth. So how to reduce taxable income legally. Okay, so let's talk about maximizing retirement contribution. We've talked about those items here in the show for many times. Say for example, a Filipino e-commerce seller. If you're making $100,000 and then you contribute $25,000 to a SEP IRA, that definitely starts to reduce taxable income to $75,000 because you are putting $25,000 to your SEP IRA. Okay, so another thing could be, leverage business tax credit or the R&D credit or research and development credit. This is for businesses developing new products. You would want to research that too. Or there's what you call the employee retention credit. This has been going on, but it already ended. But if you heard of that, you kept employees during COVID-19 and, some companies actually qualified for refund because of that. Or you would want to hire family members. Example, a Filipino bakery hires their own child, lowering taxable income while keeping money within the family. So those are good ideas that you would want to look into, might be able to help you as a Filipino business entrepreneur, right? So, and then let me just throw this question to you guys. Which of these tax savings that I mentioned or the strategies that you are already using? And tell us a story. Maybe, you have good stories and experience that other business owners would want to hear from you as well, right? So let's talk about international tax considerations for Filipinos. Sometimes, U.S.-Philippines, there is U.S.-Philippines has this what you call tax treaty. And, you might be taxed double. And you don't like that. So if you own a business in both the United States and the Philippines, you may be eligible for what you call a tax relief under the U.S.-Philippines tax treaty. There are some provisions here. Foreign tax credit. This actually claim taxes paid to the Philippines as a U.S. credit. Foreign earned income exclusion, FEIE. If you live abroad, exclude up to $120,000 in income. Or avoiding dual taxation, you would want to work with a cross-border CPA just to make sure that, there's compliance. So any Filipino entrepreneurs out there that if you're running business both in the United States and the Philippines, tell us your experience, guys, and If you're a cross-border CPA too, you might want to, tell us so we can actually reach out to you and we'll be able to learn from you as well. All right, mga kaibigan. So these are the things that I would want to, just to give you some pointers, just how we could navigate U.S. taxes as a Filipino entrepreneur. I hope this episode we were able to help you guys think of something that will be able to help you, especially on the tax side, as a business entrepreneur. So again, choose the right business structure. You would want to pay quarterly estimated taxes, deduct every eligible business expense that you can have, and then the U.S. tax saving strategies, retirement, those credit, hiring a family member, you would want to consider that. You leverage the U.S.-Philippines tax treaty if you are actually operating internationally. So again, guys, let me just try to ask this question. If you have some question, put that on the comment below, and let's see if we can cover them in the next episode. So again, guys, that's it for our episode for tonight. I hope you don't forget to like, share, subscribe if actually this topic actually helped you. So one more Filipino entrepreneur financial tips, let me know. Again, my name is Enrico Pobre. You're listening to In My Toolbox. Until the next episode, see you again, Toolbox crew.